So, you've probably heard whispers about Australia's new mortgage rules, right? Well, as of February 2026, the game has seriously changed. If you're investing in property, you can't afford to ignore what's just happened. Let me break it down for you. It's all about the 6.0 DTI rule. DTI stands for debt to income ratio. Basically, all your debts added up, divided by your pre-tax income. For example, say you earn $150,000 a year, and your combined mortgage, credit cards, and car loans total $900,000. That's a DTI of 6.0. Now here's the kicker. APRA, the banking regulator, has stepped in and told banks they can't go wild with high DTI loans anymore. From now on, banks can only let 20% of their new lending go to people with a DTI of 6.0 or above. It's not a full stop, more like a new kind of speed limit. So if you're stretching to a DTI of 6.5 or even 7, you might still get approved, but only if the bank hasn't filled up its quota for the quarter. Once that bucket's full, you're out of luck until next time. And here's where investors like me need to pay attention. Investors, by nature, usually take on bigger debts. Early numbers suggest we're twice as likely as owner-occupiers to bump against that 6.0 ceiling. So if you're planning to gear up this year, you'll want to be extra sharp. But wait for it, there's a silver lining. APRA's left some loopholes, especially for those backing new housing. If you're building a brand new home or snapping up an off-the-plan, never-lived-in property, those loans are often exempt from the DTI cap. Same goes for bridging loans if you're moving house. It's all about keeping the pipeline of new homes flowing so the market doesn't stall. Now, here's the real twist. Not all lenders are playing by the same rules. Banks, they must toe the APRA line. But non-bank lenders, those smaller specialist outfits, aren't bound by the DTI speed limit. If your ratio is nudging 7 or 8 and your bank says no, a non-bank lender might just say yes. So, what's your next move? First, check those credit card limits. Banks count your full limit, not just what you owe. Work out your DTI before you apply. It's a different world in 2026, but if you know your number and understand your options, the opportunities are still out there. Are you thinking of refinancing or making your next investment? Make sure you understand where you stand on the DTI scale. The rules may have shifted, but with the right strategy, you can still get ahead. Mortgage broker. APRA 2026. Property investment. Debt to income. Home Loans Australia.